Howdy, everybody. Brian here from quantlabs.net. Let's talk about. Alrighty. Okay, so what you're looking at is a script that I wrote showing spread analysis between the bid and ask on the minute level with Awanda data. So, what I want to talk to you about for the last 12 hours, if you were not part of the live webinar last night, you missed out. Boo hoo hoo. Lots of secret sauce was spilled at both ends, participants and myself. I learned something, so I've implemented a change, and it seems to radically filter out a lot of the bad trades. Theoretically, my strategy, this forex strategy I'm working with, the Wanda data, should work. But when you learn from a room full of people, like I did on Saturday at the Toronto Quant event, spread cost was a concern. So as a result, I used yesterday or last night's webinar to talk about that, and I've created some scripts around that. And if you want to learn more how to do this stuff, you want to learn the Python infrastructure trading course for Python version 3, which is really cheap. And I'm using the same technique, same charts that I'm going to show you are from a framework that you can easily implement to do these sort of analysis to save yourself a lot of time and bad potential trading. So let's get to it. So these 4 positions, actually there's 3. I did a fix last night. So let me tell you where we're at on the change. I'll probably put this up on my Instagram account, on the quantlabs.net Instagram later today. So take a peek at that. But right now, since around midnight last night, my time, New York time, Eastern Standard Time, the change was put in. It's regarding spread cost and the spread. So if you have a pair that looks good from the ones I showed you yesterday or on Friday, they usually have a very, very high spread cost of above 10 or so. So let me show you what I mean here. So if you do a search for real-time spread cost, and then what will happen is right here. So live spread real-time forex CFD rates. So when you start to watch this, and hopefully your broker has this type of feature, but I don't see why this spread cost cannot be applied to any retail broker. You clearly see which ones are the expensive ones that you'll never make any money on, whatever pair. A lot of pairs that were picked off have very high spread costs, but I'm going to show you that that might not be the case. So I'm going to show you why. So last night, made the change. 12 hours later, we are at 9 positions taken on. The P&L overall for those 9 positions were positive, barely, but positive. Out of the 9 positions, we have a win-loss ratio of 77.77%, but it went as low as 66%, with a total rate of change is negative at 0.07%. So what I can tell you right now, the rate of change is not going to be a true rate of change, just due to the position sizes of each pair, depending upon the pair. Plus, what really counts is the P&L, the day P&L. So if it's, as long as it's positive, you're okay. And again, we're not using leverage yet, but I can talk about that in a future video. But the win-loss ratio is pretty decent. It's pretty strong. So these are the positions taken on, different combination pairs. Again, if you were part of the webinar, you'll know exactly what I'm talking about here. But these are the pairs that were taken on. US dollar against the Indian rupee, US dollar against the Czech, and US dollar against the Swedish krona. So when you look at the costs here, you'll quickly realize that US dollar INR is at 10.5. US dollar against the SECK is 19.6. And US dollar against the Czech, let's see if I can find it right here, 73.3. So I will tell you, out of 9 positions, 1, 2, 3, 4, 4 out of 9 positions were the US dollar check. So you're asking yourself, how can you trade this profitably if your spread is as high as 76.4, for instance? So as I said, I've done the analysis. I've done a spread analysis, which will do a chart of, for comparison's sakes, euro against the US dollar, and then against the 3 other pairs I just mentioned. So let me show you the costs here. So I just got to make sure of something. And we are good to go from that point on. Yes. Okay, so what I'm going to show you is, let me do it this way. No. Okay, so I'm going to show you only the ones from yesterday, or sorry, earlier today, just to save some time. So these are the charts, okay, for the last 12 hours, the ones I'm about to show you. Okay, okay, so here we are. So we're going to ignore a bunch, okay, let's start with the euro US dollar. So this is going to be the one you would expect to have the tightest spread. So here we are, blue, bid, orange, ask. So you can see how tight it is between the two, and there's some discrepancy, fine. So the first one we need to look at is, let's say the US dollar against the Swedish, right here. Here, these are the sort of events that scare me. These ones right here. That's these divergent periods. You get wiped out on open positions with this. But somewhere along the line, along here, it tightens up. Okay, so my system will see somewhere in here an opportunity to make profit. Not a lot, but it will make it. So in this case, it was at 2:34 a.m. and 3:28 a.m. my time, Eastern Standard. So if you want to go back through your data to confirm that, please do it for your own interest sake. So again, those times were 2:34 a.m. And 3:28 a.m. for U.S. dollars, Swedish. Those are the times when the positions were taken on for those two. So the next one was more recent. These are again are in the last 12 hours. Check this out. So now this is a USD INR, or the Indian rupee. Okay, so here we are. So you're going to ask yourself, how is it possible to do this? So it's not tight at all. But somewhere in here is going to be that cost where it will enable you to take advantage of, as the spread tightens somewhere in around here, there's going to be, in this case, 3 positions taken on. Again, my time. What's today's date? The 26th, right? Yeah, okay. So these 3 positions were taken on more recently. First one, at 9:31 a.m. Second one at 9:57 a.m. and 9:14 a.m. You can see, so over a span of 45 minutes, I don't really care about the time exactly along here on the axis, and I'll show you why there were opportunities to take advantage of this trade. Now, if we move to the USD check. Now, did I do the? So as I said, this is the SE, the Swedish. So now let's look at the check. You can see here we have some spread cost along here. Boom, not good, but look right here. Right in there, you're going to get some opportunity as that puppy moves up. Now again, this is marked minute by minute. Those times for those trades was 9:59 p.m. Sorry, 9:59 a.m. Also, we have 2:18 and 2:26 and 2:15 a.m. So for one. So in a span at 2:15 a.m. my time to about 2:20, so we're 5 minutes. somewhere in here were opportunities with volume popping, momentum popping to enable it to trigger 3 positions to be taken on. So right in there, the spread was low enough and tight enough to make those changes happen. And again, that's on a minute-by-minute basis on a 5 minute. So in that small window, there was 3 opportunities of trades that were taken on and were, from what I'm seeing, actually 1 was negative. So of the 2 out of 3 were positive. So that's kind of okay. So those are the visualization, okay? But yesterday, when you look at this type of spread cost, there's opportunity here. And again, that's what the ran. This one, again, you can see the small little opportunities there, very small window that may happen. But overall, over a 24-hour period, majority of the time, we have this big spread cost. Same with this one. This one. This one's pretty good from what I've seen, the Australian Hong Kong dollar. And so forth, and so forth. So I will say this is only the second day we've been testing this. Most of the trading opportunity does seem to happen overnight, or that's in my case, in the Eastern Standard Time again. And up until about, I will say early in the morning, around 9, between 9 and 10 a.m. my time. That may have something to do with the European Open as well as the U.S. Open. So there might be some relationship there that we need to keep an eye on. And as well as the Asian Open as well, which is around 4, the setups start to happen between 4 to 6 my time when Asia opens up, namely Hong Kong and maybe China as well. So I am seeing that as well. But again, over the next few days, I'll be able to identify that and confirm that. So that's the analysis. Now, if you want to get real fancy in terms of the CSV files that this thing will generate, it will generate that. So you can see here, I'm able to download the spread of the bid and ask of the ones that I want based upon the scripts. So we can definitely do that. Okay, so let me show you an example of that. So I'll open this one right now. So I'm using Apple numbers, which I'm not a big fan of, but that's what I use for being lucky enough to be on a Mac here. So let's see if this works. Of course, CZ. Okay. Oh, you know, it's better just to do this. Copy, paste. I'm real smart, eh? Anyways, that should do that. So it should open up software we want, the spreadsheet software. Okay, so this is what this file will look like. Oh, good. Okay, so this is what I want to show you. This is the raw data that you can download from Oanda using the Python API. If you want an example of that, just go onto their GitHub repository. You should find it for version 2. And this is typical minute by minute. You can see here we have the date and the time of 0143, 0144, and so on, with both the bid and the ask and the volume for that minute as well. So that's the raw data. So now, okay, we get rid of that. So what we have open right now are some calculations that my script will dump out when it generates that chart I showed you. So let me show you a tip, what you should expect to see in terms of a tight spread cost. So if I'm looking for my, right here, this one I want to show you. So right here, added in here is a new column. Timestamp, bid, ask, and this right here Column D is the spread cost between the two of these. You can see how tight it is, 0.01. So what I do is I'm going to show you yesterday, which this one was taken on a lot. These positions, quite a number of positions were taken on for the Euro Huff. But again, when you look at the same data type, you can see here that the spread cost is pretty high. But it does range from 18, 19, all the way up to 30, I think it was. This will still make your trades fairly unprofitable. But there are windows, and look at this, it just suddenly jumps up to 166, and then it comes back down. So somewhere in here, there's these blips. I have no explanation on what causes it, nor do I care. And I'll talk about the summary in a minute, or the lessons learned, I guess. But you can see here the spread cost is calculated as part of this script. Another one, let me see if I can find if the INR is in here. Let's talk this one. These are typical trades from, okay, so this is the Euro check. You can see here, compared to the US dollar, it's still about 100 times larger than the Euro USD. But these spread costs are fairly manageable. These are the number of pips for the spread cost, which are manageable. So if you put on trades with these, theoretically, you should still be able to profit off of these pairs at this opportunity. So another one, let's do, this one's pretty low as well. As you can see, this is just as tight as the Euro US dollar. Australian Hong Kong dollar, which my system 24 hours ago were taking on positions with the Asian markets. So I hope to see more of these tonight when the markets open up. So this is a typical pair that my system will pick up. So these are not as tight as the Euro US dollar, but manageable. As you can see, it's maybe 10 times more expensive than the Euro US dollar. And let's look at one last one for an extreme. Anything to do with the ZAR, the Rand, is really high. Surprisingly, no. So again, it is fairly manageable. So this was all identified last night from somebody who's a little more seasoned than me, well, a lot more seasoned than me in the world of forex trading. So that was a benefit for both of us as we learned from each other, and that's why I do these things. So, okay, so those are some examples. So when you look at those charts that I've shown you, like here, there are opportunities on a minute-by-minute basis to take trades, even though theoretically, like here, CHF, ZAR, like it's pretty evident that here's your opportunity to take those trades when the visually the spread is fairly tight. So they do happen, but not a lot, but they do happen on the run-ups. So it's a good thing to know these things. But again, you need to really, only way to analyze this is through using your own custom data tools, because a lot of platforms don't show this. Well, they may, but who knows if they don't have out-of-box functionality so that it can help you analyze these things. But when you do the Python, it's all custom. Once you learn the skills needed to do this, you will see this in very short order and visualize, confirm your own theories, which is absolutely critical in being successful in algorithmic trading. Because if you don't, I think you will fail, and you'll fail large, and you'll lose money, and you waste time. And hey, as I always say, it's not my money when you lose out. Okay, so what I'm saying is you may obviously want to consider taking that course that I speak of. And again, let me just show you what it is. So I'll just go over to the Quant Labs Net site. Hold on here. Okay, so if you go under the store at quantlabs.net, there's a button there, right here under store, and then you just go under the look for the Python 3 version infrastructure course. Wow, it's really slow. Okay, so just right here, Python 3 infrastructure blocks with crypto. We are now able to take the same logic and, with quite a few nuances and parameter checks and whatnot, you can move it into a broker, forex broker that supports Python. And again, you'll be able to do this type of analysis, so critical with the skills that I've used for the debugging, the logging that I've shown last week. It's really beneficial. You will learn very quickly. It saddens me that people don't have the drive to do it, but as I said, it's not my issue. But I make the everything available very cheap if you're willing to put the time in. So there's some benefits there. So doing the spread analysis, let me just see if there's any updates from the quant lab, from the strategy right now. It's running. So we have 9 positions. Nothing's changed. So it's really critical. I will. Okay, so let's talk about lessons learned. Going back to, where's the numbers? Okay, so when you look at what they teach you is a pile of hooey. Like, it's just fooey. It's just not used. Right now, I'm sitting and waiting for some positions to come in from the big 6. Again, I always use the references, and everybody knows them. Euro, US dollar, Canada, Australia, Swiss franc, and the Japanese yen. I'm not seeing them. I don't see those situations. And when you look at the moves, the swings for something like the Euro, US dollar, you can see why. They're just too tight. There's no opportunity. There's no volatility in these pairs. Everybody's trading them. Everyone's watching them. So as a result, they're very stable, very tight. There's very little moves. And the only thing that will move it is either, I don't even think whale traders can move them. So the only thing that will move it are macroeconomic events. So last night, I detailed with my strategy, the current one that seems to be working, how you can use certain metrics to avoid having the need to watch economic or macroeconomic data to move a price, especially on the big 6. They don't move. The reasons I'm seeing, let me load up the trading view here. So I'll show you some examples. So the trading view is really good to confirm the signals. So, okay, so we just did US dollar, INR, the rupee, INR, come on, okay. We want Oanda. Broker's also a big factor as well. I have verified that. You do want to be with the largest broker. It's definitely Oanda. One big takeaway I can learn from all of this, when you factor in the spread cost and what I'm doing, you're eliminating the need for stop losses. You're eliminating the need to put in take profit. Also, you're also eliminating the worry about, will my broker go against me? And they don't know what you're doing. They don't know when you're going to do it. And usually when you look at these spread costs, they're probably going to think, even their human or even systematic market-making algorithms that could trade against you may not think you would be stupid enough to take on the exotic pairs like CHF and ZAR with this kind of spread cost. They're thinking, oh, he's not going to take a trade because they're going to automatically lose no matter what they trade, how they trade, at the cost, they'll lose. But will they be watching you when you take on the potential trades when the opportunities there as the spread tightens. My question is probably not. And even if they do have it systematically, trigger it systematically if the case, chances are you should still be okay with the kind of trades and opportunities I've already spoken of what I'm showing you today. So I'm now coming to the terms that even though that the broker, like when it could go against you, chances are on certain types of trades, they're not there. But again, I have to do some more analysis on that, because they're thinking that you're going to only watch what they call the G7 pairs, right? So they're not going to think you're going to be using any of these other exotics. So that's my thinking. But again, I got to do the analysis. So far, though, spread cost is an important element of forex trading. Again, if you're trading as a human trader, I think you are going to be wasting your time. I think if you're only focusing, even at a systematic level, you're wasting your time if you're only focusing on the G7. I'm convincing myself the opportunities are the ones that I'm explaining to you. Now, the other thing is you're probably wondering why the US dollar and INR. Let me just see if we can find this. I have a tendency to ramble on. Okay, last week I caught a couple of trades for the US dollar Thai baht. I didn't realize that there was an election coming up on Thailand on Sunday. So there were some trades taken to line up those trading opportunities, and my system caught it. Since then, it's not done any trades. I'm not even seeing it on my watch list of the Thai baht. We can talk about that in a minute. What's on my current watch list? Okay, so back to this. Let me see if I can find the INR. Okay, so this is Oanda, USD, INR. Okay, so this is really important. This is one of the ones that seems to work. But you have to know what you're looking for. Okay, so let's see what the technicals say. Now this is assuming daily data. So let's see what it says. I think it's going to swing towards the buy. Oh, sell. Interesting. And here it is. So let's look at the intraday chart. Okay, so you can see here there was some opportunities. It goes into a flat line, but just lately, which it was, right along here was the opportunities to buy. Let's go into a deeper look. Let's see what the technicals there say. So the technicals here say what? There's a one-day chart. It's going to be a sell. Okay, so if we are watching on the minute, wow, this thing's so slow. So we still have a sell, 5-minute, buy, 15-minute, strong buy, 1 hour. I will tell you from what I'm seeing for both the crypto and the forex, this 1 hour, 15-minute, and 5-minute are all lagging. The one you need to watch is the minute, because the minute for this type of strategy will only work, I believe, on the minute. And it flops between the two fairly quickly. And then everything else lags. Okay? So be aware of that. So maybe it works, maybe it doesn't. I don't know. Let's do another one. USD check. Oh, CZK. So the Czech koruna, and we want the Oanda. Now, when you see the ICE as a supplier, that's one of the spot markets out there. So Oanda is not that. You are trading within the network of Oanda and its clients. When trades get out of hand, it forces Oanda to step out to their prime broker to do the trade with their prime broker, which they probably will not want to do. But again, when you see those tight spreads tighten on these type of pairs, it makes you question. So here, obviously, on a daily chart, you can see it's flatlining. Right here, though, it's just oscillating, so it's oscillating up Woohoo, that's what we want. We also have a buy signal just on the daily chart. So right here you can see these moves. So my positions took on, I don't know the time exactly, but it's somewhere, so this is the check. So the time again was at 2:34 p.m. I don't know if this is the same time, but somewhere in around here it made the trade. And then later on in the day, 9:59 a.m., somewhere in here, it took the trade right here. So somewhere in there, it made money. So there was something in there that triggered it. Here, it should have triggered it, but maybe there was not enough volume. Who knows? But that's nothing I'm going to cry about. Okay, let's look at the last one here. Oh, let me look at the signals here. So that's a buy on the daily. Let's see what it says on the more smaller time frames. Okay, so daily we know it will be a buy. Okay, so at 1 minute's what I like. What's it going to say? Still a buy. 5 minutes. So this strong momentum here right now. 15 minute. Still a buy. Okay, so these seem to kind of work, but we'll do one more on the US dollar Swedish. Right here. Oh, that's not what we want. We want not FXCM. We want Oanda. Well, I don't know what's going on with TradingView. I have a 5 line and it's so slow. Fiber optic, I should say. Okay, you know what? I'm not going to worry about it. Okay, so this is FXCM. Doesn't really matter. They should be the same. Okay, well, let me pull up the Oanda. Okay. So let's see what the signals are for this pair right now. Now, you're probably asking, why are we trading the krona, the Swedish, and the Czech? I got confirmation yesterday through Bloomberg. People are trading this only for one reason: credit worthiness on these two countries. A lot of countries out there, British pound, I did see, and we'll talk about what's on the watch list, but I have seen the British pound on the watch list. But again, nothing gets triggered. So, definitely, there's I believe, a lot of volume on both the Swedish krone and the Czech, as well as the HUF, the Hungarian, because of credit worthiness. So here, in this case, it's a sell. I'm not seeing a position. Yeah, so remember when I said the Swedish was over a 45-minute, no, it was over a 15-minute time period. So just look at the intraday. Was anyone asking questions or something? Let me look. No. Okay. So you can see it's come down, but there's still opportunity. So what are we looking at? So in around here, there was some trading opportunity that my system took on. The volume, I don't know, but clearly that opportunity is come and gone. It was a very quick one. Let me just go into the technicals. So this is probably going to be a sell now, 12 hours later, or close to it. Sell on the daily, minute. Sell. It looks like it's still a sell on the minute. Strong sell. 15-minute. So yeah, I think that opportunity came and went. All right, so I'm just trying to think if there's any other things I can point out from what I remember. Probably not. So we've done the analysis. So for me, two metrics I'm looking at that are important on this overall strategy is not the daily rate of change, but I'd be more interested in the win ratio and the overall P&L are the two important ones for me. So that's what I'm looking at. But hopefully this video will help you out in some of the analysis. So again, to recap, I think it is difficult to do trading in forex. If you are watching the 6 pairs, the G7 pairs, I think it's so efficient. It's hard to get opportunity on an intraday level. On top of that, there's not enough volatility for the pairs to move. Again, on the G7 pairs, but on the ones that we've talked about, the 3 I mentioned here, in terms of positions, they have their reasons. There is volume there to make those trading opportunities happen, and that's where you got to look. So you got to do it on a minute time frame. On top of, you got to watch the spread on the bid and ask spread, not your typical open, high, low, close data on the spread. So there's a number of factors you need to be successful in forex trading, and you can only, and I'm going to confirm this, and my working theory is the working hours of New York time, let's say Eastern Standard Time, between 9 and 5, I'm not getting as much opportunity as compared to what I'm seeing on the open sessions of the major markets. Let it be Asia, let it be New York and London, which happen overnight. That's what I'm seeing. So I'm going to theorize that, confirm that later on top of a few other things, the type of relationships I'm looking at. That's pretty well it. Hopefully this will help you out, and we shall talk to you soon. I might make another interesting video on crypto because it seems something bizarre is going on there. But I thought I'd just mention this with the forex for now. But it looks like it's a go. I'll know in the next few days for sure, be able to confirm some other things. But obviously, the spread is a big factor at the broker level, even though you should theoretically be able to trade all the other ones that I mentioned yesterday. But because of the way the industry works, the retail forex industry, as well as your broker, namely even OENA being the largest, there's a lot of factors you need to consider. The spread is the big one. It's no point in taking on positions where the spread is too high, as I've shown and talked about. That should be about it for today, for now at least, and we shall talk to you later. Hopefully this will get out on the other areas of media, of YouTube and the podcast. So again, I am really convincing myself, if you want to be able to do quick analysis, have the skills to be able to do that, to be able to generate your own charts for your own analysis, for your own custom needs, that most likely your trading platform have no way to do this without banging your head and taking a lot of Tylenol. The only way to do that is by doing this course and getting the framework to do the quick analysis, be able to come up with quick summaries and surmise your own analysis. What I'm doing is showing you, which takes me literally hours instead of days and weeks with other methodologies. And this has been very helpful. And I've got other stuff down the line that is available to show you how to do logs and debugging and some other things that I'm finding that seems to be working really well for both crypto and forex, and also has prevented me from doing CFDs, and now I know why they are pretty well banned in the US. So hopefully you would be interested in this. One other thing I want to mention is the quant analytics service. What will be happening with that? That's really designed for non-programmers, for non-technical people. I got a lot of people that want to do this course, but they limit themselves on the capabilities that this offers like enormous capabilities, which is a shame, but that's up to them. And that's why I have this. So I will be, based upon the volume, the number of positions I'm seeing, and right now I'm looking at 77% of them are profitable, and they're small enough over a 12-hour period. So I'm going to guesstimate maybe 20 positions a day with forex. So if that's the case, it's fairly manageable for somebody who wants to get the buy and sell signals of this type of strategy. So I'm not going to say I'm going to do it, but I'm leaning towards I'll be able to do that and put that in as part of the quant analytics. And my older crypto strategy, we will be able to do that as well. The problem is, for both of them, I can only email it out unless you're taking crystal meth to stay awake, to receive those signals and actually act on those signals. They seem to be mostly in the overnight periods, Eastern Standard, so that's the best I can provide in terms of signals. I do have my chat server. Even if I put it on that, there's no way I can integrate it. The only way to deliver it is via email. So I'm thinking about adding that into the service in the quant analytics, and specifically, there's a lot more of this thing than you know. It does CFD, forex, as well as crypto. It's a lot of information, but people just want the lazy way, just the signals, and that's it, which is fine. But if I'm still getting currently, but I'll know, let's say by the end of the week, what strong conviction I can have that percentage of those positions or signals are profitable. So 77% thus far is very good. But I think it could be as low as 66%. But I will tell you that 66% is pretty good because one guy from Saturday, he said his win ratio is only 57%. So 66% is pretty good. Leverage is another story, but we'll see how things progress. But 66% win ratio is very good for a signaling service, and that's right now very practical. And that's in calculating the spread cost as well if you use a WANDA, the broker. So that's what I'm thinking of doing, and doing the same thing with Binance, but the signals I can provide through crypto won't be as effective, just due to the fact that the crypto market, it's in and out really fast within a few minutes. So the signals does have about a 20, 30-second lag on the delivery, unless you want to be glued to the screen. In the back end of my membership, which a lot of people will not be practically doing, I'm not interested in delivering this on a SMS service as well, because it's too much work for me, and from what I see, people don't value this sort of service, so people need to prove to me that they really want it, and I can improve it based on that. But until then, I'll be able to deliver it via email with all the other tools that I put in there as well. So that's pretty well it. I'm going to shut up now. This was a very good 12-hour session, including the webinar. I would encourage you to subscribe to both the YouTube channel at Quant Labs, the Facebook channel at Quant Labs Net, so you'll get alerts when I'm live, as like now. A lot of the future Monday night sessions will probably go private, so you will be forced to be live on those, because I'll be moving those into the elite service. A lot of gems were talked about last night, which has been very effective as far as I'm concerned, both ends of the participants as well as myself, because I'm, as I said, I've implemented way into the wee hours of the night last night to get what we have with filtering using the spread cost that I'm seeing seems to be working pretty nice, with again a 77.7 win ratio, which is pretty good. So I would encourage you to be part of that live on Monday nights, 7 p.m. my time. That's what people want. That's been what we've been doing for a long time. So as I said, I'm going to shut up now. I'm encouraging you to do all around all of this, and I'll come back with some more interesting stuff for you if you are interested. Over now, and we shall talk to you later. Bye-bye. I will say my bye-byes. This software sucks. Okay, bye. Later. I got a like. Thank you for watching. See ya.